Time for our strategy session. U.S. markets opening mixed after China says there are currently no trade talks with the U.S. going on right now. This comes after stocks notched back-to-back gains earlier this week. So how do you manage the evolving uncertainty within your portfolio? Joining us now on set, we've got Michael Reinking, senior market strategist at the New York Stock Exchange. And this is a market that is very much dependent on how the administration and some of the counterparts that are negotiating are classifying their discussions. What's your read through?
Yeah, I mean, so as you pointed out, right, we're in a market that's evolving very quickly. It's coming kind of via social media, via the commentary coming from the kind of from the exchange, and we've seen a softening of tone over the last couple of weeks. Kind of from the administration, that's helped markets come off of their lows. And then kind of the little bit of pushback that we've gotten overnight, it's kind of caused a little bit of concern. I think the other thing that's been pretty important is that we've started into earnings season, and I would say broadly speaking, those numbers are coming in better than feared. Right, you're looking at Q1 numbers that have actually been pretty strong. And then even the commentary and the guidance, we've seen kind of some companies pulling guidance. Those are more kind of consumer-facing companies that are starting to pull their guidance. But I would say, like broadly speaking, the commentary that's coming from management teams is a little bit more calming than I think markets had potentially expected.
I think that's really interesting because in looking at some of the stats this morning, about 90% of those companies are mentioning tariffs, and then you have over 40% mentioning a potential recession. What matters more right now in terms of direction for the market? The actual numbers, the earnings results, or what they're able to spin as a story about how they'll handle the economy?
Yeah, so the way we've actually kind of discussed a lot of this in some of our written commentary is kind of this delineation of BT and AT, before tariffs and after tariffs, right? And that applies to kind of economic data, and clearly Q1 earnings season, right? Q1 earnings are really that fall into that BT bucket, right? And it's telling you that the environment, kind of heading, before Liberation Day was still, holding up pretty well. We had seen some slowing, but in general things were on pretty solid footing. Right now, you're in this period of uncertainty. We might need to actually add kind of a third bucket, kind of the uncertainty bucket until we have a resolution. Mm-hmm. All right, and you're now kind of seeing companies start to lay out, the groundwork of how they're going to try to mitigate some of the costs that they're expecting, kind of from these tariffs, right? Some cost mitigation measures, moving of supply chains, kind of things of that nature. I think the key is if we don't see companies starting to kind of pull the lever of headcount reduction, right, then we can kind of muddle through, right? So that is like a real key point. I think there's still a little bit of reticence, kind of at the corporate level coming out of the pandemic to, cut headcount too quickly, especially, kind of amidst the uncertainty because they had such a hard time bringing people back into the workforce, right? So I think there's still that reticence, but if we start to see that turn, that would be kind of more concerning for the economy.
I was looking at an interesting stat from a friend of the show, Ryan Dietrich, who we all continue to kind of discuss some of these interesting stats with. And a couple days ago, he was talking about 89% of advancers, 89% of volume advancing on the NYSE happened twice over the past 9 trading days. This was as of April 22nd. But the first big day is a clue. The second day is the signal. Rare stuff, and it's always marked lows. Do you think the lows are in this market right now?
Yeah, I mean, it's really hard to kind of definitively say that. I think there's a possibility, kind of that we would retest, kind of the lows that we had seen, but that would, kind of come with a very sharp turn from the administration in terms of the tone that they're setting right now. I think in the very short term, I think the market's trying to trying to do some repair, right, and kind of reset, and we're starting to carve out a little bit of a range, right. So I think we've actually potentially touched both the bottom of that range and the top of that range in the last couple of days, right. So on Monday, we traded to 5,100 in the S&P 500. That was the post-tariff, 90-day tariff reprieve low in the day following that. Mm-hmm. We tested that in kind of a low volume sell-off in the S&P 500 and then bounced, right? And then yesterday we traded right up to the highs post the 90-day reprieve, between 5,450 and 5,500, right? So I think we're kind of setting a bit of a range right here, right? So you can kind of watch, watch those levels, kind of for some short-term signals. If we were to break to the upside, because we're actually holding up pretty well this morning, right? Despite some of the commentary overnight, if you break to that upside, I think you kind of potentially set up for a retest of maybe that 200-day moving average, 57.50. That also, kind of ties out to some of the measured moves there.
I'm interested, Michael, you sound more optimistic than I think I had anticipated this morning, and maybe that's because I'm a journalist and it's my job to be a little bit pessimistic and curious about what's happening. But what is it about what the technicals are telling you in reaction to every headline that makes you think there is that potential for a breakout, despite the fact that it's becoming more and more clear that a negotiation is not really on the table at the moment?
Right. So, right now, I think it's kind of, the clues that I'm taking are coming from kind of earnings, right? Mm-hmm. And I think, that earnings, kind of the earnings expectations had gotten pretty low. So I think, that's giving me a little bit more, kind of a little more confidence in how the market's kind of trading in the near term. I think, look, bigger picture, I think there is some downside risk to earnings estimates more broadly, right? I think, there is I think the market's still kind of around 270. You guys just pointed out that Binky, kind of laid out a low end, potentially 240 for the S&P 500, right? So there is still that downside risk, but there is the opportunity, right? This is a man-made, kind of issue. There is an opportunity, if we find an off-ramp here, but time is definitely of the essence.